All right. Welcome back, guys, to the Unique Trading Group, where strategy meets mindset and discipline turns into income. And today, wow, you guys are in for a great video. I'm going to show you some things, right? The 99% of traders, right? 99% of traders completely miss something that's happening right on the chart, right in front of you. But you can't see it unless you know how to read it. And sometimes that takes experience, right? Experience in the market. I want to introduce to you guys what I call the 3E advantage, all right? We're talking about the 3E advantage. Earnings, easing, and edge, all right? Earnings from stocks, quantitative easing from the feds, and the edge that a trader has from years of experience, okay? Waiting patiently to strike at those moments where price show you what it wants to do, all right? How these hidden elements, they directly influence the order flow, all right? They directly influence the order flow. Traps and the psychology behind these engulfing candles and W-shaped reversals you've been seeing, all right? It's all in front of you. Breakout pullbacks, that's what I want you guys to see. Breakout pullbacks. So if you want to start thinking like institutions and start reacting like retail, stick around. This one's pure value. But before we dive in, do me a favor. Hit the like button, subscribe, and turn on the bell so you'll never miss when I drop real game like this. Now, we're going to get right into it after this break because I hope you guys are ready for the recap in this game. All right, let's get into it. All right, listen, now we are inside of Stock Talk, okay? And I wanted to bring you guys back to a couple of days ago, right? When I gave out some guidance for the community, okay? And we had a 2-day fold for SPY, right? The play played out within 2 days. All right, here's the call out for SPY, all right? 663.40, that was on 10/17. All right, time of this recording is 10:21, okay? SPY has since then rallied over the weekend. The COT report came out and it was telling, all right? Now, I want you guys to get a little clip of this audio that I put for my Discord. It's going to make sense for the rest of the video to see where the headspace is at and how you get real-time, real trader insights before the market opens, right? And things play out, all right? This was at 8:51 a.m., all right? A couple half hour before the market opened, all right? Take a listen and we're going to get to those charts to see these receipts, okay? Because I want you guys to understand how this works. It's the same boring setup that prints money, all right? Let's get into it. But you must establish a target. So this comes from a 15-minute analysis, right? The data from yesterday, right? The 15-minute at the 15:15 military time mark on the 15-minute time frame, okay? This is the time frame you want to watch. If you go back to yesterday, you see that price is between 654 and 655. Now we are up right now pre-market. If we receive a pullback, right, which we always do, right, intraday, it's because people are taking their profits from their swings from yesterday, okay? And so you want to check the CNB sectors, all right, the overall market, the ES mini for SPY, the NASDAQ for Tesla, Amazon, things like that, right? The futures market, check to see where the strength is, all right? The 11 sectors I post in the market breadth section. Do we have strength today, right? Where is the VIX? Is there a gap on the VIX? Is the VIX trying to fill a gap up or down? If the VIX is trying to fill a gap up, SPY will fall back down, and the opposite. If the VIX wants to fall down, SPY will go up. But you want to watch for the perfect pullback from where it's at now. SPY 668, 667, and obviously 670 and 671 are the targets to retest previous highs. If you did not get into the swing yesterday and hold, right, wait for a pullback to previous ranges. 655, 666, 668, 667. If it's at 70, 71, you wait for the next pivot levels towards the bottom. And this is what I want you to notice now to the downside for momentum to change altogether. Remember, OPEX Friday is tomorrow. So if now, I'm going to pause that video, and as you can see in front of me on SPY, I recorded that video days ago, okay? So I said 654, 655, all right? 663 was the area where we wanted to watch, all right, for a pullback. Now, here's a video that I posted, okay? This is from the SPY Insider Leak when the COT report is released. Should you sell or hold? Watch these levels. Here's a receipt and a recap real quick. I want you guys to keep up, watch the numbers. We're going to show you what's happening in real time so you guys know what to do the rest of the week. All right, here we go. Bottom here to retrace these lows. We'll continue higher, right? When we get up here. Now we have so much momentum here, right? So much bear momentum here, right? And that the bulls, the rookies might mistake it for maybe we get back into a bull market, but I want to respect the bears. And so they could take this level here, the point of control at 663, what we mentioned at the point of control, the POC of the volume profile. If we reject here, all right, that's rejecting the halfway mark. If we reject the halfway mark here of this move, we could see lower lows, all right? We can see lower lows, and that's what you want to be thinking about. So, all right, again, so not only did I give it out on my Discord, but I gave it out on YouTube for free for the community, all right? Because the same thing plays out, all right? Waiting for price to retest these highs, all right? The halfway mark of this entire range, and then we rejected and we fell back down, all right? That's exactly what you see here on the chart. All right, these are these same moves here. See how SPY rejected, all right? That big old drop everybody bought. They bought the dip, okay? And then we came back up just to reject around these same levels, okay? 663, 664, 665. And we fell right back down to retest the lows, as I have mentioned. Now, this video is about a breakout pullback and being prepared, okay? I want you guys to get some commentary from the macroeconomic, the geopolitical side, and the technical side. I provide the technicals and the sentiment, right? And I get this from a certain area of interest, right? Where's the momentum? Where's the money flow? And what is the psychology of the market? Well, the COT report says that the banks, the big banks, that's right, the commercials, they are offloading puts and offloading calls, all right? Reducing longs and reducing the shorts. So that means that retail traders are in control, all right? We have an influx of quantitative easing, right? Quantitative easing is something by the feds where they pump money into the system, and you want to know where that money goes. Now, it took me years to figure this out, but now that I know it, it seems to be accurate and true. It's consistent. It's not perfect, but it's consistent, and I'm looking for consistency and probability, and that's what your edge is about, all right? Having something that's going to happen over time, more likely than none, all right? And so we're going to get over to Tom Lee, and then we're going to get to these charts, check out some of this commentary for you guys to understand kind of like where we're going, all right? This really makes sense. Hope you guys have been enjoying so far. After this, we're going to get into the breakdown so you guys can make some money with me and hopefully join a thriving community, the Unique Trading Group, all right? Let's get into it.
The nation's capital today. So what's your take on everything that we are talking about now daily?
Well, I heard the earlier segment, Scott, and I do think I'm kind of more in the Jamie Dimon camp, you know, that and Steve Leisman's point that there's opacity in private credit, and that's the problem that investors are going to grapple with for some time. And I think that, along with the trade tensions and, you know, the VIX spike, is the reason investors are a little cautious. But I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, you know, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally.
Now let's unwind this, okay? Listen to what he said really closely, okay? Whenever the sentiment change, right, fear comes in and people start going short, it creates a contrarian view, all right? All right, and so if people are reducing longs and reducing their calls, right, the institution, the commercial banks, all right, this caused a feedback loop, a self-fulfilling prophecy, a feedback loop in the market, all right? These are market mechanics, the things you cannot see on a chart. Whenever somebody's placing an order, it controls price action. We're going to dive more into this, all right? Just wanted to point that out to you to listen to what he's saying, okay?
Worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
It sounds, though, like this is enough on...
For a pretty good rally into the end of the year. So, you know, I think despite this mounting wall of worries, including I think there's a bit of a chase, and then sentiment has flipped negative, which is always a contrarian buy signal. So, you know, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
It sounds, though, like this is enough on your radar that do you think it's at least changed the game in the near term for the market?
On the private credit?
Just overall, I mean, if there are continued issues in private credit in the leveraged loan market, then the stock market's not going to take that well. I mean, you wouldn't think.
Yeah, I mean, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because, I mean, there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, maybe this market it's not as easy a return as it looks.
All right, and we're going to pause that there. Why is that, all right? He mentioned the word order flow, which is a great segue, order flow. In times of chaos, you guys need strategic trades in uncertain times, okay? You need strategic trades in uncertain times, all right? Here's the truth. The market doesn't move randomly. Every candle, every wick, every fake breakout, it's not noise, it's order flow. People are positioning and making decisions and creating these feedback loops from price action. When you see a bullish engulfing, all right, for example, let's just use one random bullish engulfing, okay? Let's use this candle here, all right? This candle in front of you that you see right by the 658 bounce mark right here, okay? This candle here, it engulfed this last candle, all right? Completely took it out, okay? It encompassed it, it passed the high, hammer candle, right? It passed it and we shot all the way up to retest these highs, and then we dropped again just to create a higher low. You're looking for breakouts, engulfing, retest of the highs, a pullback to create a higher low. These create good patterns. This is a W shape, a two trifarial. A simple mechanic behind price action, a simple way to think about it. Nothing different. Exactly what I just said, okay? Exactly what I just said. If I move over the chart, here's a bullish engulfing. Now, this is not a bullish engulfing, but all of these candles here, these candles, it does engulf these areas. And it's not until we shoot up right here, right? Let me show you. This is where it happens at. What do? We retest some of these highs, all right, just to come back down and retest these lows. Happens in bigger spades, better risk to reward. What is your position, your probability, right? What are these areas? Okay, so I want you to think about this. Now, this is very important, because people don't notice these things and they chase. Right now here on the 15-minute time frame, all right, we have price at 671. All right, the breakout happened from here and we have a small gap here. All right, this is a gap in between because there's no buyers and sellers present right now on a 15-minute time frame. So we broke out from this area, right, 665, which is a halfway mark from 660 and 670, right, inside of the gamma option chain, right? We broke out ATM. Now we're ranging, so this is a bull flag measured move, right? But if we fall below this 21 EMA, all right, and break down below this previous range here, we can revisit some of these lows to retest 666, all right, a previous breakout from 665, 666. Breakout, pullback. So the move you'll see is this, all right, breaking out and pulling back. Now right here is an area of interest, okay, because we've seen these moves before. This isn't something new that we haven't seen, guys. All right, we've already seen these moves before. If I move over the chart, you'll see the same exact moves. Okay, see the same exact moves. All right, look right here. All right, price broke out from here. We broke out, and we went back to the same area we broke out from. Okay, we dropped here. We bounced from here, went all the way back up to retest some of these highs, previous ranges. All right, at the top here. And then we retest these lows again, all right? The market is a feedback loop, and you got to learn to spot these opportunities for the best risk to reward. Now, the scenario here is a breakout pullback. Now, if we get down here, there's going to be some rookies that are chasing, all right? They're not watching these videos like you guys. You guys are having an advantage watching my videos, but some rookies are still not aware of these techniques, and so you're going to be able to trap them in when they're not aware of them chasing. So a lot of people like to chase. So if we fall here, we're going to take profits from puts, fill that gap. You got two things that can happen, right? You have a gap fill and go, or a gap fill and reversal. A gap fill and reversal means it's going to come in and fill this gap and reverse back towards the other side. A gap fill and go, meaning it's going to come fill this gap and continue towards the downside to retest 660 and maybe even 658, 657. We can retest any of these lows. It just depends on how many people are chasing and when is the right time for the market to suck up all of the liquidity. Okay, that's what you want to notice. All right, so those are the bullish engulfing setups that I want you to think about. All right, buyers are stepping in at those moments. That's liquidity being trapped. Stop losses from trapped sellers flipping into market buy orders. And when you see a W-shaped pattern, that's the magic, right? All right, that's the market grabbing liquidity twice, all right? Shaking out weekends and then rewarding the patient trader. Here's a W shape right here in front of you, all right? Let the bears try once and let them try twice, even if you caught this one. Once, twice, okay? Higher low, let them try W shape, okay? That's what you're looking for. Simple and stupid, all right? Breakout pullbacks, W shapes, M shapes, head and shoulders. All right. Now, what you're really watching is human behavior, guys. These charts encapsulate human behavior in motion. And this is where most traders fail. They're reacting to what they see and not what's happening behind it. Here with the Unique Trading Group, you look under the surface, you look under the hood, you see the invisible, the smart money footprints, because in this game, what you can't see is what costs you the most. All right, so the first E that I spoke about is earnings, okay? Earnings, that's what we want to talk about, earnings. All right, the E, all right, in our 3E framework stands for earnings, and right now we have a bunch of earnings coming out. The market is showing some resilience. We have a lot of stocks that I want to talk about and get into with the community. UiPath, Nokia, following some BlackRock stocks. I like PATH and what it stands for. And as you can see, there's a great opportunity sitting right in front of you. All right. A lot of companies have earnings this week. All right. Going to be posting that inside of the Discord. But you want to think of earnings as a pulse of confidence in the market, right? When the data drops, the crowd reacts. But institutions, they already positioned before you even saw the numbers. Here's the key. Watch the reaction, not the result. When bad earnings come out, but the stock doesn't fall, that's strength, all right? That's absorption. That's smart money buying from fearful retail, okay? All right? Remember that the market transfers money from the impatient to the patient. That's what's happening, all right? And every time it happens, it's another chapter in the same story. Liquidity gets taken, positions flip, and the trend starts to build quietly, all right? All right, the second E out of the 3 E's, easing, quantitative easing, all right? The Federal Reserve invisible hand. When liquidity increases, even subtly, right? Risk assess start to breathe, guys, all right? You get these smooth rallies, those perfect pullbacks. When I'm talking about for SPY, this is what's happening right now. But don't mistake easing for a guarantee. It's not a green light, it's a green maze. You need to follow the liquidity, all right? Hide the tape, all right? In 2025, we're going to see the market whipsaw. Banks reducing their exposure, retail overextending. That imbalance, that's where the opportunity hides, all right? That's where the opportunity hides, okay? Right there with the retail. Now, the third E out of my 3E segue is the edge. First, we have earnings, and we have easing, quantitative easing, and now we have our edge. Now, that's our final E. The most powerful is our edge. Your edge is not your setup, it's your mindset. When you learn to understand the traps, the OCO orders, one cancels the other, the fake breakouts, the stop runs, you stop trading emotionally and you start trading intentionally. You don't chase, you wait. You don't hope, you read. You don't react, you anticipate. That's the edge. Clarity when everyone else is confused, not understanding the market mechanics on why this is happening. It's order flow. What you cannot see, I'm explaining. So you'll be able to study this video after. Just like this chart in front of you. This is PATH, PATH. Now, if you do your homework on this company, you'll see the evaluation. You see that they have no debt. You'll see the balance sheet. You see who owns it, right? Follow the money. Does BlackRock own this? Does Citadel own this? Does Kathy Woods? Are there major institutional holdings? You want to know these things. Is it a guarantee? No, but it's a boost of confidence. The next step in your trading journey is to chart out the chart in the key areas of interest. That way you're working from a systematic approach and not guessing as soon as you open up a chart, all right? There's a big difference. Now, in closing, I want you guys to understand this, all right? Here's what I want you to take away. The 3E advantage isn't just theory, it's a lens, all right? A way to interpret price action like a professional. You're not just watching candles, you're decoding behavior. Price action is human behavior. And once you see what others can't, you never look at the chart the same way again. In this video, I give you some clarity. So hit the like button, drop a comment below with your biggest takeaway, any questions you may have. I talk, I engage back. Make sure you subscribe because the next episode, we're going to go even deeper into trading psychology, traps, and how to time your entries with institutional precision. This is the unique trading group where strategy meets mindset and discipline turns into income. I want you guys to stay sharp out there, stay liquid, and I'll catch you in the next one. All right. Thanks for your time. Peace.